What is going on, guys? Welcome on into today's Sunday Night Live. We are looking at the market. We're looking at futures right now. We got a lot to talk about before this upcoming week. And then we're going to dive into a bunch of charts, a bunch of setups that we are looking at. As we speak right now, futures are up. Let's pop her up. We're looking at the S&P, which right now is up 0.33%. As we speak. It was actually up a little over 0.5%, maybe like a half hour to an hour ago, like shortly after futures opened. And then it's come back a little bit, not super surprising. You know, when you get these big moves in futures, unless there's some substantial news that's driving it, many times they somewhat revert to some sort of mean. Doesn't have to, but you see that a lot. So right now we're looking at the S&P, and here's a bunch of levels that I've got. I'll go to the 1 year, 1 day. Actually, let's go to the hourly first, then we'll zoom out to that far. So if I jump over to the hourly, what we've got right now is essentially a monster move, if you think about it, from Friday morning to where we are right now, to where we finished Friday. And now, I mean, all of these hourly candles we had, 1, 2, 3, 4, 5, 6, like 8, 9 hours in a row of green. Up after a couple hour drawdown. Now, the thing is that we were looking at last week on Friday was like somewhere right in here. We're like, hey, let's see if we can get back above this, break a higher high compared to that level, which, had technically been a lower high compared to the past couple, over the past, couple of sessions. So that was a good sign, I guess, for bulls, right? For momentum. And right now, what you want to see us do, we're not that far off. What you want to see this week is for us to get up here. However it happens, whatever, right? Whether it's, pull back and do this and get up there, or if it's more of a straight move, whatever it is, you want to see us get up there to feel better about the bullish case. And so that would put us, on the S&P on futures here, 40.50 or so above that. And then 40.75 is like the true, wick to the upside from Wednesday. I think that was from Powell, when the Fed had their statement and all that great stuff, FOMC. So we'll see if we get that. And if you zoom out a little further, what you'll start to see is that still, though, on the shorter time scales, like, yes, you've got, we can probably draw an uptrend line here. Let's see. Yeah, you're pretty good. It's not perfect, but it's pretty good. You can see higher lows building nicely, right? Really since like mid-March is kind of the time frame that we're looking at on that front. And then, technically, well, not technically, and then you've got these lower highs also kind of being put in on the bigger time frames, right? It's not a perfectly easy to make trend line, but the general gist is something along those lines, right? Lower highs is all you got to pay attention to, right? So you want to see us break above this area, all right, to break that trend, and to validate these higher lows. We break down here, then boom, that's over. Then we're going down, right? Not, of course, anything can happen, right? But then when we break down below this level of Friday's low, and that would be a pretty substantial move, I would think, to the downside. To get there, number one, and number two, probably from there, from a technical perspective. So that's the 1 hour. Let's go to the daily really quick and zoom ourselves in here on the daily. Reason why I got these levels, this actually was breached, so I guess I could mark that there. And then some spots I guess I can adjust. I should adjust these lines, but really the spots I'm watching is down around Friday's low for this level, for more downside, and then really this 40.50 or so for upside. Above 40.50 looks good, but below 39.40 or 39.35 doesn't look great. That's on futures. So let's look at a couple other things and to set the stage. And then we'll get into some individual stocks, which is the plan. That is the plan. What's going on, guys? Hope you guys had a great weekend. Went to my first Austin FC game this weekend, which was pretty cool. The stadium's like a couple years old, pretty much brand new. Beautiful stadium. Definitely need to get back to watch some soccer. I know was never a massive fan, but honestly, like I can get behind it. It's definitely fun to watch, and it's just a simple game to watch because you don't have to wait for a million stoppages, generally, like you do in football and basketball, baseball. That's why I really got turned off from baseball. It just was very, very slow. And they got some stuff in the works there, I guess, maybe on the baseball front to get it back up and running in terms of popularity and I guess ease of watching and enjoyment from the fan side of things. But I don't know. That's just kind of my take on it. Smash like on the way in. If you guys don't mind, that would be awesome. If you can, go ahead and do that. I hope you guys are doing good on this fine Sunday evening. Here it is like, we had an 80-something degree day. It's like 80 out right now in Austin, Texas. Nice day. Can't complain, and ready to have a great week. That's the plan. Daily on Alex bullish, descending, broadening wedge, breakout inbound. Yeah, I would think, if I had to get, we'll look at the chart. I think what kind of bases my thoughts too on that a whole picture. I'll go to SPY. I guess this is futures. I'll go to SPY. Like, you kind of frame this look too, and like this chart on the daily on SPY. Yeah, what I'm looking at more so is like, okay, what do we have right here? Right, here's the pattern that we're kind of building. You can go back to the October lows if you want to kind of count that. But you got this pattern here. And, my suspicion is that, it's until we break this low right here around 380 on SPY, we should suspect, this pattern to continue until proven otherwise, right? So something up in here wouldn't surprise me. 430. I think 430 on SPY would be like a really nice spot. That would be the August highs. Like, that would be a pretty good, 432 is August highs roughly. It would be a pretty good spot if we made a move to that level in the next couple of weeks or months. I'm sure, a lot of stuff that we're looking at would do well. Good trim spot, maybe even a good hedge spot. Like, it's a good spot to kind of start saying, hey, maybe it's time to take some gains on selective things, on the more risky positions maybe that you have, and, of course, or trim some if you don't want to sell all of it, right? Trim something off, right? Take something off the table, minimize margin, whatever, if that's the case. So that's kind of like my view on that. And hey, if we go down, great. The lower we go, the more interested I'd be in buying certain things and adding to longer term positions, right? So we'll see. But if we look at individual stocks, which we're going to do in a minute, I think it's pretty clear that, the bias for me right now would probably be up, because a lot of these charts look really good and are pretty close to highs of the year. Now, SPY's not there. The NASDAQ is right there. Here's QQQ, right? Pretty close to, it actually made a new high for the year, on Wednesday. Powell was speaking, I believe, and then came back off. But I mean, you're right there. So tech doing a lot better, and I think that will because the S&P is so heavily weighted, or at least some of the larger weights are in tech. If tech keeps plowing up, you would think the S&P is going to get, some sort of a magnetic effect to the upside, right? To some degree. Obviously, inside the S&P, there's more than just tech, but that would be a factor to watch. Okay, a couple of things before we dive into some stocks. Okay, VIX. VIX levels for me this week, above 25. Get concerning about, volatility, or below 20. And that VIX is kind of falling off, and you'd expect the market to be kind of ripping at least at that point in time. So watching that level, 20 on the low end, and then for downside watch, and 25 for upside watch in the VIX. 10-year yield. This is going to be fun to watch this week. I'm curious to see if we get down towards, 3.2, something along those lines. It's moving pretty interesting the past couple of weeks, right? Ever since this big push over 4, and now just getting crushed. What you'd want to see to kind of validate this idea being that, hey, the end of, not the end, but we're much closer to the end of hikes, and if not already there, and the Fed's kind of hands are tied. The question is going to be, or not the question, but the reality to me is, we could have this kind of like this general trajectory, right, for a while. Like, this wouldn't surprise me, right? The general pattern would be down, right? Wouldn't surprise me. Where we get more concerning, I think, is if we start looking over here at the 10-year and everything like kind of seems fine, right? From the market or the economy, things kind of blow over, right? But if this is doing this and it's like falling deep through the 2s, the 2% and into the upper 2s and 2.5, like that would be the concern, because then at that point in time, you're like, okay, wait a second. What is the bond market seeing that maybe people aren't seeing in terms of recession or in terms of concerns, right, down the road? So I think in a perfect world, if you want the market to kind of, or you want everyone to kind of be feeling good and you want this scenario to work out nicely and you want this like softer landing, you would probably, you can have some bumpy, ups and downs, right? Some sharp moves, but you generally wouldn't want to see the 10-year collapse. You'd want to see it like generally just like trend down over the next, 6, 12, 18 months. and then we can kind of like ease back into like, okay, rates can kind of come down to, a bit lower, down into the 2s or 3s, whether they're now up around 5, the Fed funds rate, whatever. They can come down there and the market kind of sees them there for a bit. And that's kind of like what the 10-year is trying to do. So I don't know. We'll see what happens, but that would be a better view for a soft landing. These aggressive ups and downs, like if we go like this, probably not good. There's some concerns on inflation, you would imagine. If we do this, probably not good because you got some more concerns for a bigger recession and more problems later on. So something in between would be ideal, right? From a stability, less volatility, relaxed market, maybe economy, handling itself perspective, if that makes any sense. So that's that. DXY, the dollar index. I mean, it's just doing its thing. I'm really not too concerned about this thing until it either gets down below 101 or it gets above 105.50, and that's really it on the dollar for me. So I'm just gonna watch that kind of closely. Beyond that, oil. Let's go oil, nat gas, Bitcoin, gold, silver, and then we'll kind of go into individual stocks. So here's a look at oil. I'm honestly kind of a little salty that oil has come down so much, but gas, I feel like, hasn't really come down as much as of late. It's kind of weird. I guess, I don't know. We'll see what happens here, but ideally, if this continues to trend down, you'd see gas trend lower as well. We'll see what happens. Oil right around $70 is kind of a key spot. It was our bounce point back here in December. So ideally, right, if this is going to continue to pattern perfectly, then what you'd want to look for is it could come up a little more, I would say, like up into this zone right here. Which was some of the lows from January, February, which was like around 73.50 or so. 74 will be kind of like the case for a back test. Kind of got close up in there, and then you'd want to see it kind of just do this for the trend to continue. In a perfect world, we'll see if we actually get that or not. But pattern looks pretty nasty to the day. Looks pretty bearish. I'm saying nasty. You can put your terminology aside, right? Who cares? It just looks bearish, bullish. You can associate it with good and bad if you're in a position. I'm not really, well, I guess I have oil hedges, I guess. But if I had an oil long or short futures wise, then I could say it's good, bad, this or that. But it just is what it is. The move is the move. It is bullish or bearish. It is this. It's doing this. The price is this. It's not about is it good or bad, right? I guess it's how you view it at the end of the day. And your positioning is probably what causes you to think it's good or bad. So there's that. Natural gas. I mean, it makes me want to short that. Like it does. It definitely does. Yet my track record with natural gas has been pretty bad. So I would be hesitant to do so. How would you short it? You'd short it for a breakdown below. Honestly, under 225 natural gas would be a pretty good spot. But technically speaking, like 222 or 221 would be the breakdown here. You'd expect a move if we were to break down below this level, at least to test this 209 or 210 area, which was the low of the year. And if you break below that, $2 is the next psychological spot on natural gas. How do you play that? There's a couple ways. BOIL is the natural gas leverage long. So you would short BOIL. If you were expecting natural gas to go down, you would go long BOIL. If you were expecting natural gas to go up, and then you would go with cold, KOLD is the inverse, the ultra short natural gas ETF. So you'd go long cold if you're expecting natural gas to go down. So if I were to do it, how could you do it? Probably go with long cold shares, buy cold shares and look to sell them, into probably up into all-time highs, or at least this year's highs, right? Which would be up in the mid to low 80s would be the look if you're going to do that. The only problem with BOIL, I was looking at options last week and they're just kind of pricey, which is why I kind of was turned off by that. But you can also just short BOIL shares depending upon if you can do that or not with your broker. But that's another idea. The problem when you go to options on that front, right, you're playing with a leverage ETF options. If the move is going your way, let's say you were short BOIL with puts when it was like up in here, and you had puts that expired in about a month or two. I mean, you did very, very well because BOIL essentially dropped like $2 or $3, in a pretty consistent spin. There was not choppiness. There was not like, consolidation. It was just pretty much go down the entire time. So that's how you do very well in that. But we'll see. So let's go 3 more charts and then we'll dive into the chart requests and we'll dive into some other stocks. Bitcoin, this looks like a bull flag to me. I mean, who knows what's going to happen here, but you'd look for I'm not surprised. It's consolidating right here. This is like the breakdown point that once Bitcoin broke below this level on its way down back in May to June of last year, we haven't tested it till now. So key spot, consolidated just north of this level, and then it broke down. So I'm not surprised we're seeing some resistance here. On a healthy pullback, maybe down towards 25K before move up for a healthy pullback, if that's the case. Otherwise, we start to break down below 25K. Not the best of looks on Bitcoin, in my opinion. Gold. Super strong gold. I go out to the daily on gold. You're coming up to some pretty strong resistance here. Gold up around 2080, 2075, 2075. Right now it's just shy of 2000. It just touched 2000 last 2 weeks or so. But now it's trying to consolidate maybe about around here. Looks good. Maybe that's telling us something, right? Silver, not as strong, but it's kind of right there, and silver moves a little bit more generally than gold. So it can get back up there pretty quickly, but silver is a key spot. Silver above $24.50, $24.50 an ounce on silver, and we could have a nice move to the upside setting up. So we'll see what happens there. That's the look on gold, silver, Bitcoin, a bunch of different stuff to kind of frame us into today's watch list or scan, whatever you want to call it. Last thing is, I want to mention this. We mentioned it a few minutes ago. For those who are coming in now, by the way, thumbs up button. I appreciate you guys for doing so. And that's what it's all about, number one, because we get more ideas in the chat, more good stuff, more commentary, more ideas. Maybe that gives you something that you can play off of this week or next week or whatnot. But futures-wise, 0.41% to the upside right now on futures. We pretty much closed last week, around right up in here, and then on Friday. So we're above that nicely, above 4,000 on the S&P futures right now. We'll see if that continues into the open tomorrow morning. Lock and change. One last thing to mention before we get into those charts is the news. So what we're looking at right now is we've got Fed speaker on Monday at 5 p.m., so really nothing on Monday. No big news. We've got trade balance and goods, retail inventories, wholesale inventories coming out on Tuesday. Home price index as well. Home sales on Wednesday. FedGov bar testifies to the House on banks. Could be notable stuff to listen to there. GDP second revision. Shouldn't be really too big a deal there. Jobless claim. So it's a kind of a quiet week, to be honest. Until Friday. Yeah, Friday is a big day. Personal income, PCE, some more inflation stuff. Not insane, not CPI, necessarily CPI level market movers, but some good stuff that you'd want to pay attention to see what some of these numbers come in at on Friday, because they could be influential in the markets and they could make a move or influence a move in a up or downward direction, right? So we'll see, but that's the look for this week. So there you guys have it. Now let's dive on in. Hope you guys are doing great on this fine Sunday evening. I know for those of you who are here, you probably heard that already. But for those jumping in, glad to have you. And I'm looking at some of the comments now. PBA chart. Good monthly dividend payer. Let's take a look at PBA. Coming down nicely. Pipeline Corp, so an oil and gas company. Well, here's the thing, right? With oil and gas, the thing that you got to start thinking about too, as oil and gas have looked, well, oil's looked pretty bearish, right? The past couple of weeks, months. That chart we just looked at a few minutes ago. So, great. Here's the thing. Unless oil was to crash or the market was to crash, we can start thinking about maybe some of these oil and gas companies start to become buys. The only problem is that a lot of them are inflated. This one, I don't know if this one doesn't seem to be as inflated as an ExxonMobil and whatnot, or an Oxy or whatever, in terms of where it's trading, just looking at the rough trading range, right? It's down $12 off the highs, and it pretty much peaked out, I believe, shortly after or right around when oil did. So it's kind of trading closer to what oil does, which is kind of cool. But with a dividend of 6.23%, this is an interesting one. There's been a lot of talk, or at least a lot of speculation. And then from what I look at from a couple of different things, I try to keep a lot of the short-term stuff. midterm, medium term forecasts and ideas, I like to kick that stuff out the window when I look at different macroeconomists and whatnot, because at the end of the day, no one freaking knows what's going to happen like in 6 months. But what about like a decade time frame, right? And so I'm seeing a lot of talk about a shift into a much more commodity-driven bull market at some point, right, over the next decade, which would kind of take us away from this like tech and whatever, Kathy Wood innovation-driven stuff. Maybe that's the case. Individual stocks, right? Companies are thriving, then it doesn't really matter. The stock will probably do okay. But this is a sector that interests me a lot, potentially, for some longer-term positioning. Like, if we really get a bigger crash or drawdown or whatever, if you want to call it, right, in the next couple of months to years to quarters, whatever the time frame is. Because again, predicting the time frame of that, right, you're trying to predict like almost like a black swan. I don't want to say that necessarily because, we could generally just see what if oil just trades down for the next 2 years and like, a lot of these stocks are down, half of where they are now. Like that wouldn't, and it wasn't like a crash. It was like a slow bleed, right? It's possible. It's a scenario. But if you're trying to predict like black swan, that's where you run into trouble. Because like, okay, who the fuck knows? No one knows like what we're gonna like when the market's gonna crash or when this is gonna like. No one knows. You can have a general idea that things don't look great because of this, and this. But like, okay, the black swan talk. Let's get out of here with that. But this is an interesting stock. It's at a key spot, right in here. Shoot, I gotta fix the colors on this thing. 1 second. Yeah, there it is. It's at a key spot right now. You'd want to see it kind of hold up in the upper 20s. Although if that level goes, there could be some nice downside if oil is weak. So this could be something to think about. If the company's solid and you like the company, for a dividend payer, it's a nice fat dividend payer and monthly at that, right? Something to think about adding to maybe a longer term approach or longer term. Also, Warren Buffett's another guy who's picking up a decent amount of, oil and gas shares for the long ride. Ideally, he doesn't care about what happens in the next 2 years. He's more so looking at decades, right? So that's another one who's positioning in that manner. So we'll see on that front. Let me run through some of the comments. QQ had a very similar looking pattern, thinking why the hell not? SPY, no guarantees, of course, in terms of SPY kind of catching up to some degree. Don't want to touch natural gas, don't understand the way it moves. Yeah, that's the thing. And maybe, someone who's been dialed in and nailing natural gas the past six months, wants to take a shot at it. For me, if I'm going to take a shot at it, it would be with a tight stop and it would be a small size if I'm going to play it. And to be honest, I look around and I say, there's probably other opportunities that I've got a better handle on anyway than natural gas. So, plenty of other stuff to do. Let's see. Holding Boyle and praying for bull run. But yeah, the volatility decay is killing those. But hey, if we get a commodity driven bull market like we're talking about like in a couple of years, like for example, that's like if that's the next bull market, whatever it is, then maybe nat gas, who knows what happens now, but maybe nat gas heads down and tests, into this like upper to mid 1 range, who knows? And then it has a monstrous move back to 10 plus over the next decade, right? So that's a time where, it's hard to miss on playing the long side, right? If you just kind of grab something, you'll do pretty good if that's overall the move on some of these things. Tomorrow we're gonna know who's going to buy SIVB. Fubo jet fuels up to $13 a gallon in Central Florida. Okay. TCRT, ready for the run. Let's start taking a look. So let's look at Fubo. Fubo is a stock I haven't looked at in a while. I can't say that I've been my eyes haven't been super glued to Fubo. Maybe it was a few months back, but not really now. Actually, because they had this big pump from, from like 250 to 7s. That's cheap. This is talking about penny stock land. And it's kind of interesting. I don't know much about the fundamentals of Fubo. Like I haven't followed the Fubo fundamentals like by any means, but look at this chart and you're saying, okay, market cap is 234 million. Okay. I'm kind of curious. Like what are their numbers? Like what are we even like talking about here? income statement. And it's like right here. I'm going to cut myself out of the way for a second. On TradingView, a lot of people don't realize like some of the stuff that's behind the scenes here. And you can even expand on some of these things too. But I'm just looking at some just quick and dirty income statements, balance sheet. What do we got here? Debt to assets, 68%. That's been kind of really gliding higher. And then we also see that total assets have been dropping. Total liabilities have been also kind of like slowly but surely creeping up. So you don't want to see that and not surprised that that's happening, right? But, ideally you don't want to see that. Fubo blew up from like 2019 to 2021 for sure. But in that process, got some more debt, right? That's certainly the case. And then times kind of change and things get a little bit more difficult, and then, the tides can turn, right? So that's kind of unfortunate for them. But that was a quick and dirty view of the fundamentals. Looking at the balance sheet and whatnot. I can look at cash flow. What's cash flow looking like? Past couple quarters, cash flow, operating cash flow, negative 90 million. Now it's at negative 23 million. Investing is at 98 million and financing at 63. Those numbers have been kind of all over the place, I feel like, the past year or so. But yeah, if I look at zoom in on this chart, give it a second to load up. Not looking the best. We had earnings like a couple weeks ago, so we don't have earnings out until it looks like late June. So that's a good sign. It's a stock that I don't want to say this is a nice kind of little flag consolidation right here. It wasn't like a perfect, but it was a nice flag. We're not really setting that up right now because it kind of came down to this 96 cent. I think that dollar area is going to be key. Put a marker right there at the low 96 or so. That's a key spot, and the next key spot will be up right here at like 130. So pretty decent range, right, from a percentage perspective. But underneath 96, 95 cents, not a great look for downside. Better volume, I'll tell you that. Better volume here the past, couple of days. Over 130 would be a neck. Probably kicks us off into a move up towards 170, which is like a key breakdown point around 170 or so on Fubo. TCRT. I can start looking. Well, no, I got the UONE. That's not the best of looks, although it's down towards the lows. Like these, when you're looking at, if I saw a large cap stock that had a chart that looked like this, like I'd be much more inclined to say, like, this is looking great for downside. Because, you got these lower highs, you're trying to consolidate here into these lows, like you're just kind of breathing before the next leg down until proven otherwise, right? But it's a small cap. And so when you got small caps that get down to this price point, what's the market cap? Market cap's 113 million. You'd want to check their cash position and all that stuff. Let's zoom out though on this chart and see this massive run. It's also coming down into the pretty close to the lows that we saw back in early 2022. That'll be a spot to watch from maybe a bounce around 40-ish cents. So you're getting down to a spot that might be a good accumulation zone with a stop loss under 40-ish. You can obviously, and we've seen it happen a million times the past like 2 years, these stocks can easily flush through these levels, right? And go a lot lower. So just be careful if that is the case. But it's getting down to from a risk reward perspective, would you rather be going long? Like you can think of it this way. Would you rather be going long or short here? Right? If you know a little bit about the company and their cash position and they got a couple catalysts and whatever, and it looked decent, right? Is it a long-term investment? Probably not. Look decent. What's your bet? Like if you go short here, make sure you have a stop loss in place somewhat tight because you don't want to be caught in something like this. That would destroy you. Slight interest in commodities, next industrial revolution. Yeah, I don't know. I mean, I'm just thinking about it. Like, what if that's the case? And then we see gold going nuts, and maybe we see, I don't know, maybe does Bitcoin partake in that? I have no idea. Is that going to count? I don't know. Maybe it does. Maybe it doesn't. That's why I think it's a good way to diversify for sure. But going all eggs in one basket, I don't know. Take on a lot more risk. And if you're right, you're going to kill it. You're going to be set. But if you're wrong, like if I just went all in of long-term investments into Bitcoin, right? Say I was a massive Bitcoin bull or this or that, whatever you want to call some of these guys. I mean, yeah, you could do that, right? But the problem is like, it's a very aggressive approach and it's not very diversified. And so what if Bitcoin is not the answer? What if Bitcoin somehow implodes or whatever for whatever reasons that, not yet in front of us, right? Then do you kind of get screwed, right? So you don't want to be in that camp, in my opinion, especially with long-term positions. A nice rounded portfolio, hey, cool. If Bitcoin's a pretty nice chunk, I don't know what percentage you want to allocate, but if it's a nice chunk, fine. But at least you got other stuff to kind of protect you, right? Ideally, I'm using Fubo to watch English soccer games, but not buying the stock. I looked at Fubo. I was contemplating it a while back from a live sports, I guess, service, and I think for soccer it's great. But the only problem that I had was like, here's the thing. Here's what I always run into when it comes to these stupid streaming services, okay? And I say stupid because I don't pay for any of them. And the concept is great. And for like the casual person, it's probably fine. But in my situation, right, I'll watch a lot of Penn State stuff. That's where I went to school. So I'll watch a lot of Penn State, basketball, football, whatever. Primarily basketball, football. And so that means I got to have Big Ten Network, okay, for a lot of their games. Here's the problem is that sometimes it's on Big Ten Network. Sometimes it's on Fox Sports 1. Like, it goes back and forth. So you have to have like an all-encompassing sports package. And then there's also times where I'm like, yeah, I want to watch that random game between these two teams or whatever that are, in the SEC. Or so like I go back and forth and I just haven't been able to find a package that would essentially allow me to never need to go on to those streaming sites and find those free streams filled with all the ads, probably illegal, I don't know, but someone's, ripping them from somewhere to watch a game, because I come to that point where like I have like, maybe you can have YouTube TV and buy the sports package, or you can have this, but I get to that point where I'm like, well, it's got most of what I want, but when I do want to watch like that kind of obscure game, but I also kind of want to watch it, like I just can't get it. And I'm like, well, now I'm going on my computer, I'm finding the stream, connecting the HDMI to the TV and setting it all up. And I'm like, well, why am I even paying for this freaking, $80 a month strips of service that I use just for a couple games a week at most? And I can't even get all the games. Like, it's like, that's what I always get back to. So it's stupid I get pissed like when it comes down to that stuff, really. And then it's like, oh, you want to watch the World Cup or like the Olympics, like, and then things like that pop up, or then March Madness. You gotta have TBS, you gotta have True TV, you gotta have TNT, you gotta have CBS. So like, it's like if you don't have it all, I think YouTube TV does. If you don't have it all for all these scenarios, I don't want it. I don't care. I'm not gonna pay for this stupid stuff because I don't watch enough. I don't watch TV. Literally don't watch TV. Maybe like Netflix here and there, but like I, don't watch much TV, so it's not worth paying for everything else that I'm only going to use a couple times a week. At best, in the summertime, when there's a pretty big lull in sports, like I don't watch anything. I guess you could just turn off the subscription and turn it back on, I guess, but I don't know. JackX, lots of volume lately. Have cash, lots of debt. Let's pull up Jack. This is a chart, and we talked about it again, I think a few weeks ago. And I think we talked about it when it was, if I can go back in time. Yeah. This day that it spiked to 140 and then got crushed. We were talking about it because I saw the volume and I was like, something's going on there, right? Here's the thing with it. It's definitely getting some good volume, right? But it is also up. Oh, I lost my percentages. It's up a decent amount off the lows. It's up almost like 100% off the lows already. So I got to be a little careful there. Do I like that volume? Yes. Do I like that it's up 100% off the lows already? Probably not. I'd like to get it closer to the lows if possible. And I think the sign was probably that day we talked about it to keep it on the radar. And I think as we made that flush under $1, looking back, that's probably been a good buy. It probably is a nice buy. So watch the volume. This thing can easily get back up into the 3 area. I could see that happening on a squeeze for sure. Does it mean that it has to stay there? No, not at all. Look at this chart, though. Look at this chart. I mean, it's just like, is it going to be that easy for shorts? Squeeze them out, reset reset the stage, and then you can give a nice, backside short again. But I think you need to get a flush on some of the shorts, if you ask me. But we'll see. I'm watching that one nicely, though. You can watch Football on 3 separate locations, with a couple of friends, or split the subscription. Okay, that makes sense. You could do that. That's pretty cool. I'm sure. I mean, the thing I also saw was I saw a post somewhere. I forget where it was, and it was cable average price of $83 a month, and it was all your subscription services, and it comes out to average price is $87 a month. I'm yeah, of course that's how it is, because you got to have a bunch of them. It's I hate the monopolies thing, and I hate going back to the Amazon stuff, but to be honest, what would be the easiest thing for a consumer? I log into my Amazon account, I go to TV, I have every fucking channel I could possibly imagine. I can watch anything at any time that's live, and it's done. I don't have to have 17 different streaming services. I go into the other section that has TV shows. I can watch any TV show. I go to the movies. I can watch any, as much as that would suck from a monopoly standpoint, and I get it that there's maybe laws or things in place to prevent that. I mean, it would be easy on us. I would prefer that. I use Amazon for everything anyway now. It's I might as well. I don't care. Bought the service Bitcoin, lifetime sub in 2015, $200 worth, and I haven't been a bill since. 15,000 live. That's sick. That's insane. That's crazy, actually. Yeah. Kevin's got the hookup from 2015. All right, so what do we got? We're going to go 36 minutes here. Pretty cool. Time flies, right? All right, let's look at them those charts. I'm going to scroll down through some of the large caps. I'm going to go through my whole ETF list one by one, and then we'll walk through that, right? And then, of course, if you got any ideas, just toss them down, and we'll look at them in a half hour or so. So your SPY, we're trying to talk about that. Here's QQQ, a lot stronger. IWM, small caps, a lot weaker. If you are in the camp and believe that there will be some sort of bounce back or reversion to some sort of mean, then IWM might be the better value buy here at this point in time. But a little sketch. It's at a key spot. You want to see it staying above 170 from here. I don't want to see it much below 170, because then you're down towards testing lows of this bear market, and it wouldn't be the best look, right? Not to mention, if you go to the weekly chart on IWM, this is interesting. Okay, look at this. You got essentially a nice fat flag setting up, potentially, as in, what do we see here? Lows. Let's go to the highs of the flag, roughly up in here. And, I mean, you break down below 161. Suggests we got a decent move down. Not the best of looks from that perspective. Yeah, I mean, that's a flag right there. We break down below 162. It's roughly the spot. Not a good look on IWM. So that's a key spot to watch. That's the levels out on our charts. But we can turn that around with a push back over 200. You get back over 200 and you can change your mind. You can't, we're obviously skewed towards looking at the downside because we're closer to the downside right now. But if it holds this level and gets back up into here, that could turn the tide for sure. Okay, let's go back to the daily charts, and let's go down to the DIA, the Dow. Dow's, I mean, if I extend this trend line from the ultimate, it's not a perfect trend line though, because it broke way earlier than everything else. But also, it's kind of testing it again. It back tested this line right here, back testing again right now. You want to see the area around 314, 315, really 315 holding on DIA. But it's been weaker, that's for sure, as of late. Whereas it was super strong, from October to December. And then it's weakening in terms of its relative strength. So there's always these little intricacies going on, inside of an overall market going up or down, right? What's stronger, what's weaker? Right now, is it a big deal? In the grand scheme, to be honest, a lot of stuff kind of figures itself out, and a lot of stuff reverts to some sort of mean. But Why is it's important? It's like if, let's say, you're day trading or you're a short-term trader and you understand these like big picture cues, right? Like, okay, well, the Dow has been weak, or the NASDAQ's been strong. So if I'm looking on the long side because the market's green today, I'd probably rather point myself in the direction of a tech stock for a day trade, or the NASDAQ for a day trade, because it's been strong. If it's not on that day, maybe there's a red flag that pops up, but it's been strong. And I'd rather play with where the strength has been versus trying to go where the strength hasn't been and trying to more so buy a dip almost, and you've got less momentum on your side. You've kind of got some things going against you. Of course, if you can time those reversal points, time the lows, and time when we start seeing that relative strength shift back and forth, right? You can crush it, do very, very well. But I've found it's less consistent to do that. That is for sure. Okay, TLT, the bond, the 20-year Treasury bond ETF, key spots, 110. Over 110, and we get the party started to the upside on TLT, below like $100, and we got to look out for downside. I'll mark that level right there. Look out for downside. On Mr. TLT. XBI has been way weaker. This is a spot right around the 72.50 that I would be interested to see if it holds. Was a higher low bounce. Also was a bounce spot back in April. Higher low back here in June. So I'm curious if that holds. If that does not hold, I don't know. We can start looking at it for a buy, but to be honest, I would much rather buy this thing once if the market's red in general. It could easily bottom out before the overall market, sure, do its own thing, but I would much rather buy this when the market's red if this is going to break down below the 70. So, you better buys in the 60s, I would think, right? On XBI, if that's the case, if this level can't hold. If it holds, your buy is right now. SMH is a 3X, not 3X, this is the semiconductor ETF, been super strong. Concerns about this, I've been seeing a lot of people talking about how we must see weakness. It's got to pull back. NVIDIA's got to pull back. This thing is, a fat pig. That could easily send us higher, right? That mindset could easily be what squeezes it out higher. So just be careful if you're just thinking that way, right? Make sure you're thinking both sides. XLE, the energy ETF. This thing has been obviously weak as of late. You want to see the next level. Let me get rid of this line. Next key spot to watch on XLE is going to right in there around this 75.35 or roughly $75 or so. If that level breaks down, you probably see oil breaking down. There's a gap to fill in the chart down into here. Down to about from 74.30 down to about 73. So could get a nice little gap fill there as our first target to the downside. So that's the look on that. XLI, no. I mean, it looked good a few weeks back. We were talking about it like, oh, here we go, breakout alert, right? Had the alert, set. Just broke down, right? We saw weakness in the industrial sector, just broke down. Simple as that. Not a huge fan of this chart at all. Just let it do its thing for a bit. XLF, weak, however, if Friday's low holds, inverse head and shoulders, potentially. Also, though, it's not the best of looks because you couldn't break this level right here. It's a wonky space to try to buy the dip. However, if you are, if you have a stop in place, it could provide a really nice bounce if that level holds to Friday. So see what happens there, but watching, really around $30. That level breaks down. Not a fan of that chart. XLF is a financial ETF. Not surprised. XLV, higher lows, I guess. Not the best looking charts, but higher lows, and kind of had this lower high right here. So it's like, it's a little wonky. I've looked at this chart a couple times, and it was trading in this nice channel for a while, and it was cool, but broke down below that channel. Now it's kind of just like whatever. I don't know. Not really a huge fan. To be honest, this signals to me this is downside below this 123.50 area. That's going to be downside if it breaks that. XLP is the consumer staples ETF. I initiated a small swing on this thing last week with how it closed. Looking for 75. Stop loss is at 71.50 or so. It looks strong. I broke this downtrend and looks strong. Closed very strong. So going to play it off that. So we'll see. All right. Dow's been a bit sluggish. Seeing with that big breakout, but barely. It's looking weak, right? For as of late. SRZN heading to its lows. Rinse and repeat. Let's see. That would be cool to rinse and repeat it, right? But yeah, it doesn't look good. Broke down below 80 cents. Now it's back at 70. Not the best of looks. You know, my guess is that, yeah, it could shop around, but the guess is that this is probably headed down over time, right? Lower, much lower, one would think. I guess we can put a little downtrend here. I got water. I got this like water in my ear that just literally that just doesn't. It's not coming out. I've tried like everything, just won't come out. Went into I did a sensory. I bought these gift cards like for my girlfriend and I a long time ago, months ago. I saw like a special they were having like a 2-for-1. So I bought them. I was like, let's kind of see what happens. And it was like one of those like salt water bath almost like floats. So you go in the water and you just float. Like if you just lay down, you just float. But it's a sensory deprivation like chamber thing. Pod chamber sounds a little more aggressive. Pitch black. I like we watch all the videos. Like it didn't like nowhere like in the videos did it say it was going to get pitch black. However, sensory deprivation probably was enough for me to go, yeah, dumbass. It's probably about to go pitch black here. Like the whole point is but it was an hour. So like I get in this thing. I'm like, that's kind of cool. Of course, you know, while they give you earplugs, I didn't use them initially. Water in my ear. Now, go in this thing, right? They have a little light on, a little music playing. So you kind of sit there and you're like, all right. Whatever. And the light starts to dim. I'm like, oh, this is kind of nice. Like, yeah, dim it a little more. And okay. And then it goes pitch black. And I'm like, oh, fuck. I'm splashing around like, holy shit. Because now I'm like, I can't see shit. I wasn't prepared for that. Open the door. Grab the earplugs, too. Those are on the ground. Like, I can't find those. Pitch black. Open the door. A little bit of light in the other room. So I was able to find it. And then, like, I kind of calmed the hell down. It was kind of cool, but still got the freaking salt water in my ear from, like, 2 days ago, which sucks. Can't get that shit out. Posted on Nvidia and Twitter. This morning, kept calling it the fattest pig in the market, and they keep averaging the puts. I mean, hey, yeah, this is Nvidia right here. I know. I can see what people are saying. I get it. But again, right? It's just an example of people, and it's very easy to get into that. I've been there. I've done the fucking same thing. And, you know, it's very easy. You have a couple wins. You do well for a bit. You feel like you're on top of the world, and you think you got everything. And then you're like, no, it's going to come down, so I'm just going to keep buying puts. What if it doesn't, right? You blow up. And the other part about it too is that I think what is crazy about that is that the whole Twitter or, you know, YouTube or whatever space is that like a lot of people, they'll hide the losses, number one, but it's like, or they make so much money elsewhere or whatever that their followers who follow them for these plays are all in on this thing and they lost their entire accounts. Like the better stuff to talk about is the risk management. It's the what ifs. It's not about the when this kind of works, or it's not about just keep going in all like that shit's not gonna be a long-term strategy, right? Because if you are looking at Nvidia puts, right now, what's your stop loss? 1 or 276 at the high of last week would be the stop loss, right? That would be my stop loss. You know, you get above that, sure. Could you look at the next level being the March highs around 288, 289, like 290? Sure, right? But the thing is, if you're playing options, you're probably going to get fucked because there's almost like, unless you're buying super far out of the out options, like buying like a year at a time or 6 months time, you can't afford this. Your contracts are crushed if you've been shorting it this way up. You can't average in like that. If you're shorting shares, yeah, you can hold this for a while. Because if I'm shorting shares and I got a minimal interest rate or whatever the number is, it's probably very minimal because NVIDIA is a massive stock. It's not a small cap where there's a lot of competition for shares, right? If I'm shorting shares on NVIDIA, so what? I'll freaking hold that for a year if I truly believe it's fundamentally overvalued by a crap ton, enough for me to go short the stock. Yeah, then maybe I'll short shares and I can hold through a bigger move up. I can maybe hold through, you know, a test of even, dare we say, the all-time highs. I don't know, you know, or I can hold through the next couple earnings that might, you know, be telling because I'm looking at the fundamentals. But if I'm holding options, like, you are asking for trouble. That's just the way I see it. Should have held on to D-Nut. D-Nut? What does D-Nut look like? We got these. Oh my gosh. That's hilarious. That's actually insane. Because I remember, for those who are not familiar, we were talking about it back in here. This is why I got that level. We were talking about it back there. Back when it was around like $11. Now it's at like 15, 16. Killer on D-Nut. That's Krispy Kreme, by the way. Here's your gap. If you're looking for pullbacks, maybe back into this area, 1460s, but above $16, we got a ripper. We got a possible ripper here on D-Nut. That's funny. That is funny. Sounds crazy, hallucination. No, I mean, the way it made you like, and the thing is, the water was super warm in that like chamber, right? So the salt, like you're floating on the salt water, which is cool. It's pretty cool. But like the air was so thick and like it just warm. I don't know what it was. It had to be like 80 plus 90 degrees in there. I don't know what it was. So like I'm in there and I'm just like feeling like it's like just tough to breathe almost. So like I couldn't relax because I'm like, every time I stopped thinking about things that I'm just in my head, I started thinking about my breath and I'm like, holy fuck, I can't breathe. Like that was all what's going through my head like the whole time. But I guess it's kind of cool. I guess if you do it enough, there's probably some good use. There's probably a lot of good benefits. It was cool, but do not sign a deal with McDonald's. That'll do it. That shall do it. Krispy Kreme times McDonald's. That's a combo right there. And that's a combo and a half. I'll tell you, we got these donuts, these donut holes from Whole Foods. They were like, put them on display. You got them the other day. They're freaking good. I'm about to take some of those down here shortly after the stream because we got them a couple days ago, kind of fell asleep, whatever, the night before, and then it was out last night, so I didn't eat them. But I'm about to take a couple of those down. No problem. Little ice cream. Okay. Charts we're looking at. Microsoft. Here's the chart. I mean, Microsoft, you got a gap to fill here up to like 285. I have a small option, like very small option position on Microsoft and on Meta going into this week. We talked about it late on the live stream on Friday. The reason why was I was saying to myself, I look at it this way. If we gapped up, which right now futures are up, 0.3, 0.4%. If we gapped up and I missed this move because I didn't get in because we had really good strength on Friday and we ended up gapping up to like, $2-3 in the morning, would I be pissed that I didn't take the trade? Probably, because I saw it, I watched, I was identifying it, I was right in front of me. The weekend timing kind of threw me off in terms of like, should I get in or not? So I say to myself, would I be pissed and disappointed if I missed this? Yes. Do I really, really care at the end of the day because there's $1 million setups? No. So the answer was go with super, super, super small size, like micro size. So where like if it went to zero, I don't care. But if we get a nice push this week, I bought 2 weeks of time. If we get a good push on Monday through Wednesday this week, great. Take them off and I make a few bucks. Like, make 100% is ideal on the contracts. Yeah, maybe more, I guess, in a perfect world. But and that's it. And then they're done. And so you caught it. You caught the move. Ideally, though, Microsoft above 281 bullish for a target up around 286. And then Meta is another one that I'm looking at what is this level? 208, 207 to 208 is like the spot. Above that, 210 plus I think is doable on those. Now, problem is if they break their uptrends, these are on the hourly charts. I was looking at these levels. If Meta under 203.50, that's a breakdown of that pattern. Reconsider. Could it break down like we said last week? Could it do this? Yeah, it could, but from that trade perspective, you got to stop out at some point, right? So you stop out and move on. What was it? Microsoft would be the same thing, just underneath like 275, 274, 275. I think it's 275. 275 the spot. Breaks down, out. Other than that, we talked about Google a little bit last week. Beast off the trend line bounce, like pretty much perfectly off the bounce. was a weak stock up until 2-3 weeks ago, or really 2 weeks ago. Then it really kind of caught fire and ripping hard as of late on Google. I got a donut today. I love donuts. Geff definitely can afford it. Yeah, I mean, hey, you don't need to make too much money to be able to afford donuts. I'll tell you that. Different things we were looking at because the board behind me, I'm going to try. I don't know if I can sell it, to be honest. It's like almost 10 years old, if not 10 years old. But I got to get a new board. So looking at boards, my girlfriend got skis today because she got some skis from 10 years ago, and she had whenever she got skis. So we got that squared away. And this shit's expensive, really expensive. Now there's better deals right now for skis and snowboards and stuff because it's like end of the season. But my goodness, man, that stuff is expensive. You got to make some, again, I guess skiing and snowboarding, that's a rich person's sport, as they say, right? That's what everyone says. You can do it cheap, but it's expensive. It's an expensive sport. But we want to try to get out. We try to do some family trips every year, but honestly, we want to try to do we live in Austin, Texas, so it's not a really easy drive, but I think it would be sick because I don't mind driving. I think it's kind of fun. I did a drive essentially from Big Sky, Montana to Nashville 2 weeks ago. Whatever, it is what it is. It's just driving. We drove through essentially a storm the entire time, snow and then rain. It was a mess. But if we get out to Colorado, it's 14-ish hours or so to Telluride, I think. Telluride, which is I wouldn't say lesser populated mountain than your Vails and shit, because Vail, everyone goes to Denver and they go to Vail and wherever they go. I'm much more of the ski or a snowboard versus I don't really need to be the town. I just want to snowboard and ski. That's it. So I think we're looking at maybe Telluride for a drive trip, maybe a long weekend type of deal where it's drive one day, ski 2, drive home. I don't know, stuff like that I want to start doing. Also, there's Taos, New Mexico, which is 10, 11 hours, I think. But not only they don't get as much snow. The best corridor for snow is from if this is Salt Lake City and this is Big Sky, Montana, or Bozeman, Montana. They're kind of stacked upon each other, right? Then you have Jackson, Wyoming and whatever, and there's Idaho back in here and stuff. This is the corridor right here from Salt Lake City up to southern Montana. This is where there is the best snow. I'm literally someone who is, now in terms of quality, you get a lot of snow in California, but it's a lot heavier. In my opinion, this is where you're going to get the best quality snow and the most of it in that corridor from Salt Lake City all the way up to about Big Sky, Montana. Obviously, mountains are mountains, right? They're going to get more snow than the lower lying areas, but that's the better. You get more bang for your buck in terms of moisture out there, and it's nice, dry, fluffy stuff. And if you go off the canyons, the Cottonwood Canyons in Salt Lake City, that rivals the West Coast, California and even up to whatever, Seattle and stuff, or mountains out there. That area rivals that in terms of amount of snow. But the reason why I think it's better is because it's just better quality. It's lighter, fluffier snow. So better powder over there. And storms are maybe not as intense as some of the storms you get in California. Those things are nuts. The wind, just hurricane conditions. It's absolutely nuts. You can get that anywhere, I guess. But that's from me being with a literal degree in meteorology, knowing actually kind of knowing my shit. You want to be in that corridor. Salt Lake up to Montana. Best snow really off of Salt Lake, Cottonwood Canyons, the literal best snow in my opinion you're going to find. Sounds dope. Somewhere in New Mexico, then go see some Breaking Bad scenes in real life. My parents were just out there a couple months ago. They went to do a whole tour, Breaking Bad tour. NVDS ETF for short NVIDIA. Yeah, if you're going to short, that's an idea too. We were talking about NVIDIA, right? NVDS. Is the 1.25 leverage short. So again, if you were hey, I got a cash account, I can't short, my broker won't let me short, there's all these different ETFs you can buy in these days that can short these stocks and you don't have to worry. Now, of course, it's a daily ETF, so there is a little bit of downside risk there. It's a slight leverage, not insane. But if you can generally time the move, you get that compound rate working for you. If NVIDIA goes on a 6-month downtrend, this will do well. As we see how it's done, the opposite of that, really since October, it's gone from 67 down to 16. It can go from 16 to 50 if you get a nice, pullback for like a couple months, right? Don't get me wrong. Breaking Bad tour. Yeah, they have a friend that lives out there, and they give him like a whole thing. Wait, you're a weatherman? I guess technically. I have a degree in meteorology and weather risk management and a minor in energy business finance from Penn State. So that's what I did for 4 years. Expensive as fuck. But yeah. No, I mean, to be honest, my original thought process right now, was I would go into more of like a business related field with the weather, where it's like you're forecasting for an insurance company, or let's say you're forecasting at like an airport, something like that. I guess like more there's like application to that, like weather risk management is more so the title. There's like the whole broadcast side like that. Like I got a lot of friends who are in the broadcast side of it, who are on TV literally. Storm chaser, want to be a storm. That's the other thing. I 100% still want to do that. I still would love to do that. The thing is, and I guess you can do it now. I'm not sure if you guys know. Pull up the Twitter account. But the guy's name, I believe, is Reed Timmer. If you know who this guy is, he's done it, but it's not as easy as you think in terms of like making this a career. I'm not sure his whole background, but essentially he just chases extreme weather, right? And the problem is like you're thinking to yourself, okay, I'd be sick to do, but how do I like get a job? How do I do that with a job? It's not as easy as you think, because it's like, okay, like you could work for a company that like could send you out in the field, but like then there's also other requirements, like whether it's like writing stories or reporting and stuff like that. This guy like literally just does his own thing. He's got a YouTube channel. Like he just literally, I'm pretty sure like you can find it all. Yeah. Like, and the numbers are pretty crazy too. It's like almost 700,000 subscribers. Like look at some of these videos, 278,000 views, 1.5 million views, like inside Hurricane Ian eye wall. Like that is like nuts. That stuff to me is so cool, extremely dangerous, but that is so cool. And the videos do well. So like, this is how I guess you can turn this into like an actual, like literal, I guess job when you are getting views to this, you have built up a base of that many people who care. And so you can get views, whether I don't think he does sponsors. I have no idea. Maybe he does do sponsorships. I have no idea. But it's just tough to do it from like a job perspective, because usually there's other requirements and it's not as simple as, oh yeah, I get to just go around the country just chasing storms. You got other stuff that's involved. Although it is a pretty sick gig, I would say. But that's something I would love to do. I would just like to do it for fun. Just like I always say, like if we get a hurricane in Southeast Texas, like I think to myself, like I want to freaking drive into like, not the literal coast, but like kind of close, figure out a position higher ground, like deal like that. Depends about how bad it is. And like, you just experience it. Cause like, it'd be so cool. I had some up in when I lived in Connecticut, we had Hurricane Sandy. I mean, we got power out for a week. We're out of power. Like we got crushed there. That was in Southwest Connecticut. Long Island, New Jersey got crushed too. We had Hurricane Irene was like another week as well. That stuff was cool, but was it like super, super intense? Like not really. I mean, in terms of like the winds and stuff, the extreme weather that you see there, it was cool. Don't get me wrong. I was like outside half the time too, because I was like, back then I was like, I don't know, was I in high school or something like that? So it was cool, but yeah. I think a lot of people do. Like as a kid, I'd always be that, like when I was playing sports throughout most of my childhood, right? I would be like sitting there like at my computer or like whatever, like watching the radar, like in the summertime when I have like summer lacrosse practice or whatever, or like football practice. And I'd be like, okay, like we got some storms coming in today. Good chance that we get a canceled practice, or we're like mid practice and we get some storms coming through. Like it's going to be nice. Like we're going to get out early today. Like that would be me. Like I would, or like just being out there, like in it, and like the winds coming, the clouds coming in, the lightning's coming in. Like I would just like that, honestly, more than playing the sport that we were playing at the time. But that was just me. So you gotta love some severe weather. And at the same time, you feel like an ass saying that, because people are getting, this stuff is dangerous. Like these hurricane or these tornadoes, like people are dying, losing all their stuff. Like it's losing family members. It's not a joke, but just like watching like nature do what it does is crazy. I think it's crazy. It's really cool. So this guy's got it done. He does it all. And he's got a Flex Seal. He did a Flex Seal commercial or promo. So yeah, maybe he does get paid for sponsors. That's actually hilarious. He probably got paid a lot of money for that too. That's actually nuts. So you can do it. You can make money, a decent amount of money doing that. Alrighty, guys. So this week, Monday, Wednesday, Friday, I'm not going to be around. My friend my roommate from college, who actually, by the way, is literally on TV doing weather in Oklahoma City, is coming to town for a couple of days. So I'm going to be away essentially from Friday to like Tuesday, or Friday to like Monday. So like 4 days. So he'll be here. I think he's leaving on Tuesday. So I'll be back on Tuesday, but we'll do live streams Monday, Wednesday, Thursday probably, because then I won't be around Friday. So that's the plan for this week. And yeah, so Power Hour Live, for those who miss them, can't hang out on those. If what I've been starting to do now is post highlights, post some of the shorts, like cut up some of the lives and make them into shorts, so that people who haven't seen the lives can kind of watch some of the highlights or some of the stuff we talk about and whatever, which is kind of cool. So that's the plan. Thanks so much for watching. I hope you guys have a great rest of your Sunday night. And let's have a great week. Peace out. Enjoy.